Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we'll look back on last week, some of the key trends that we were observing in asset markets, and then we'll just look forward to what we can expect from the week that is to come. So just last week, really pretty volatile and challenging period, both for equity markets and for sovereign bond markets over the course of the week. And really the contrasting performance of the various different indices is very much aligned with those themes that we've been discussing over the past number of weeks. Rising sovereign bond yields, the impact that that has in valuation, and how that impacts different areas of the equity market. And we've seen that in terms of the differentiated performance that we saw last week with the likes of the S&P 500 outperforming the Nasdaq, that more growth orientated index. And in the same way, we've seen good performances from European assets as well, including here in the UK with the performance of the main market here over the course of last week. At a style level, value very much continues to be in focus, continuing to outperform growth. The volatile journey for equity markets was very similar on Friday as well, very much a function of the backdrop of the volatility that we're seeing in the sovereign bond market. It was the turn really of the employment report in the US for February to bring that to the fore really, and we had a much stronger gain in employment than had been expected, so 379,000 jobs added. The expectation had been around for about 180,000, so quite a significant improvement there. Also digging into that, very interesting to note that the strength of that improvement was in hospitality and also in entertainment, two of those areas most hit by the COVID-19 pandemic. So improvement in those areas a real positive. We did then see the sovereign bond market in the US, the 10-year Treasury moving out to about 1.6% as a result of that, purely because it speaks to better performance in terms of economic growth, the US being ahead of other regions as well. So concern then continuing to feed in that inflation may or may not be stronger than people have anticipated. We've also seen that in terms of the other broader economic data that we've been seeing from the US. So those factors together driving that volatility in the sovereign bond market, that feeding into equity markets as well. Where did we end on Friday? So as I said, we got to 160 in terms of the Treasury 10-year yield. We did come in to about 156 to close the day, and that was supportive for the equity market performance that we saw towards the end of the day in the US. I think the other thing just in the US to be aware of, we did see President Biden's fiscal package that got approval in the Senate, so $1.9 trillion in terms of some of the key parts of that. $1,400 support payments to come through, additional unemployment benefits, additional support for state and local governments in the US as well. That will come out over the next number of months, with final approval in the House of Representatives expected at some point during this week. So again, that feeding into this positive dynamic that we've been discussing in relation to US markets. The other area of where this is all feeding through to is been a slight change in currency markets. We've been very much a theme of we've been discussing has been that weakness of the US dollar. What we saw last week as rising real yields and sentiment improving around the economic growth prospects of the US continues to build. We've seen a bit of strength in the dollar over the course of the week, so the dollar strengthening about 1.3, 1.4% on a trade-weighted basis. Other thing just to touch on then is just the strength that we saw in the oil price over the course of last week. Again, a number of factors feeding into that. One, positive growth backdrop. Two, the decisions from OPEC and OPEC Plus not to change the quota. And then just finally over the weekend, some terrorist-related activity in Saudi Arabia, which has just given a little bit further support to the oil market this morning. Turning then to the week ahead. Last week very much as employment this week, really. It's inflation data that we get across a lot of global economies. Again, that will be crucially important given how we've seen sovereign bond yields move over the past 4 weeks. Also in the UK, we'll be getting monthly GDP and industrial production activity for January. That'll be a key measure just to see where the UK economy is at this point in time as we move through with speed the vaccination programme, which supports that reopening and that positive sentiment as we get through into the latter half of this year. We also get the ECB meeting this week, which I think could be quite interesting, not from any policy change perspective, but more in terms of their commentary around what we have seen in sovereign bond markets and whether the ECB feels that the movement that we've seen is in any way being restrictive on financial conditions and they feel the need to take any action there. Just then turning to Asia overnight, a mixed performance from equity markets really. Very strong Chinese economic data in terms of exports and imports, but do remember we're going to get this over the next number of months, very much skewed by the base effect of last year and the impact of COVID-19. So very much a look through those numbers at this point in time. I'll leave it there, but please do join us over the course of the week and do subscribe on our YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.